Friends, I actually fancy myself as a fundamental analyst. I try and cover the commodities market. I'm a student of the commodities market with extremely limited familiarity with the stock market and the forex market. Uh, but I do not ignore technical analysis. I very closely read what my friend Chandrashekhar writes twice a week for my paper, The Hindu Business Line. Palm oil price outlook and gold price outlook from a technical analyst perspective. I recall in 2002, for the first time in India, when the commodity futures markets were opened up, I conceptualized and designed a training program for stockbrokers and bankers and others to enter commodity futures market. And it was actually done at the BSc. I've done dozens of programs in the last 12 or 13 years. And one of the questions all the students would ask is, sir, what should I follow? Should I follow fundamental analysis or should I follow technical analysis? And then I made that into a presentation for half an hour, and I showed the merits of fundamental analysis and the merits of technical analysis and said it is not fundamental or technical, it is fundamental and technical. And therefore, I would urge those of you who are technical analysts here, please also look at fundamental analysis. Try and learn the fundamentals of the fundamental analysis, the basics of that analysis. Those of you who are not familiar with technical analysis, please, for heaven's sake, God's sake, for your own sake, start learning technical analysis. It's an absolutely exciting subject. This gives you wonderful insights into what I call the mood of the market. You will be able to map the mood of the market very well through technical analysis. And I think this is something which is extremely important. And therefore, Sushil, at ATMA, there is an extraordinary opportunity to expand the membership, not only just the membership of ATMA, to get a lot more young people onto the stream of technical analysts, do training program, do awareness program, and I'm sure there is going to be there is a great opportunity for a win-win for everybody. After that, I'm going to mention in one of my pet theories is that there are 5 major drivers of any market. I usually apply to commodities market, but it can actually be expanded to any market. There are 5 major drivers. What are these 5 major drivers? One is economic growth. Second driver is geopolitics, primarily impacting the crude market and the gold market. Third one is monetary policy. The monetary policy has become extremely important in the last 7 or 8 years after the 2008 global crisis. The countries like the United States are following an extremely liberal monetary policy, whereas China and India, emerging markets, follow a dear money policy. But this certainly impacts the flow of money and flow of investment. For the third market driver is monetary policy. The fourth driver is currency. Whether it is a rupee or the dollar or the euro is immaterial, but currencies and the dynamics of the currencies market certainly affect other markets as well. And the fifth one is weather. Weather obviously impacts the agriculture markets a lot more than they impact other markets. So there are 5 major drivers of every market: economic growth, geopolitics, monetary policy, currency, and weather. Now, I want to provoke all of you here. I want to challenge all of you here. Usually, I've seen technical analysts looking very closely at the stock market, securities market, looking closely at the commodities market, and of course now currency market. Is it possible to expand the application of technical analysis principles, Sushil, to, for example, forecasting global economic growth? You have enough data for the last probably 30 years of data available with the OECD. Go to a website called oecd.org. And that every month comes up with leading indicators, composite leading indicators for global economic growth. If you have data for last 30 years, and it is actually region-wise and country-wise. Would technical analysts become now much sharper and apply their skills to be able to forecast economic growth in the future, next 1 month, 6 months, 1 year, 3 years? Is it possible? Think about it. I think that's a great opportunity. You can now actually break out of this narrow shell of technical analysis only for the equities market, or only for the commodity market, or only for the currency market. Look at the bigger picture. There are opportunities available. You have enough data on the world's monetary policies, the monetary policies of major central banks of the world over the last 30 or 40 years. If you did an analysis of that, you will probably, I don't know, you will probably be able to forecast what will be China's monetary policy in the next 1 year, or what changes could the Reserve Bank bring about in its monetary policy probably in the next 6 months to 1 year. Technical analysis will probably give you some insight into what is in store based on what you have seen, the experience of the past. Obviously, there is a pattern in life, there is a pattern in the market's behavior, and will you be able to extrapolate that pattern that you have seen of the past into the future? Think about it. I think there is a great opportunity awaiting technical analysts. Currently, most of you are confining yourself to markets where you have data available, you have a large number of market participants, and much of your technical analysis is data dependent and data driven. But there is a lot more big data available elsewhere also in this world, particularly from the economic growth perspective, monetary policy perspective. I think if you're able to look at that kind of big picture or the bigger picture, I think the scope of activities of the technical analysts will expand manyfold, and I'm sure there will be extraordinary demand that will generate for the expertise that technical analysts are able to bring onto the table. I think this is I'm able to see a fantastic future for technical analysts. And obviously, with that, the fantastic future for ATMA. ATMA is still a nascent organization. And I think once this nascent technique and this nascent organization are able to gather pace and accelerate, and I'm sure there'll be a lot more people who will join this mainstream. And hopefully, at some stage in future, technical analysis could become the mainstream analysis, rather than a subsidiary analysis, which it currently is. Let us be honest, we need to accept it. And therefore, I think it then devolves on all of you present here to ensure and do everything that's possible to bring technical analysis actually into the mainstream. And those investors should first look at what a technical analyst is saying or is forecasting, rather than anything else. I think that's where would lie the success of technical analysts. And for this is a provocation, this is a challenge which I wish to throw at you. And I'm sure all of you with your knowledge, your commitment, and your passion will be able to come up with the right answers, and will be able to expand your portfolio, and of course benefit yourself, benefit the market, and benefit the nation. Good luck, and God bless you all. Thank you.